Futures are climbing here as this week goes by, but that's not the only thing climbing. Interest rates climbing too. It is 6:14. Brandon Haefele joins us, CEO of Catalyst Mortgage. It's great to have you here, Brandon.
Thanks for having me.
Always extremely helpful, and this is a practical and angst-inducing topic for people this morning. The Fed just raised the rates a quarter of a point. They're likely to do that a couple of more times this year, and people are in a little bit of a panic in the home market because prices are going up and up, and the people from the Bay Area are coming here buying our houses. Put our minds to rest a little bit if you can.
Well, it's really important that we look at interest rates as a whole, that, mortgage rates are more of a geopolitical and based off of our current economy and our existing, what's going on in the U.S. Mortgage rates are not just affected by the Fed funds rate. Really what, affects mortgage rates will, be what happens, national news and so on. So when you look at how are, home buyers potentially affected, it's credit cards, it's things like home equity lines of credit. When we see the Fed funds rate go up, really mortgage, equity line of credit, what your monthly payments, credit card payments will also increase, and that can affect your debt to income ratio. And so when we're looking at qualifying for a home loan, besides the last 2 years of home prices increasing, now you have monthly payments on those credit cards increasing, which does what? Affects your debt to income ratio and affects your qualifying.
Okay, yeah, so again, the immediate impact for a home shopper is this could impact your ability to qualify.
Absolutely, it can affect the monthly payments that you're making, which then in turn will affect your qualification on a home loan.
Give me some practical advice. How do I keep that from happening?
Really you want to pay down your credit card balances.
Okay.
If you're not going to be purchasing, let's say, in the next 6 months, maybe it's going to be a year, you want to look at maybe transferring those balances that are a higher interest to a 0% interest credit card, so then that way you can pay the balance off faster. But at the same time, when you're shopping and you're actually in the process with a lender, make sure you have a buffer in place. Meaning, if you're going to trying for a $300,000 purchase price, do you have enough room in your debt to income ratio if rates do go up further and or mortgage rates start to shift, that you're still going to qualify for that $300,000? Meaning, don't go right to your exact qualification. Give yourself some room.
There could be people thinking, well, I'm pre-qualified, I know I can afford this, and they may discover that they can't because of their financial situation, not because of the price of the house.
Right, exactly. You really want to make sure that you're doing your research now. It's the most important time for a consumer to be educated, for them, for you to do your own research and not just shop a lender for the rate, but also make sure you're getting the education you need to qualify.
Okay. I won't hold you to it, but any guesses about the rate for home loans in the coming year?
Definitely, we're going to see an increase. I think by end of this year we're going to see low fours to still high fours to low fives.
Okay.
But really at the same time shop around, because every lender is different. Most lenders offer the same products, meaning down payment assistance and so on. But it comes down to the interest rate and what's going to save you the most amount of money.
If it makes anybody feel better, my first home loan was in 1981, and it was 14.5%. So it's all perspective. It is always great to talk to you, Brandon. You have great advice every time. The CEO, Catalyst Mortgage. We'll chat with you again as things go.